Today is Monday, January 23rd, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADM IS Senior Ag Analyst, and Alan Bush, ADM IS Senior Financial Economist. Starting with the financials this morning, Alan, what policy changes will the Federal Reserve make at its meetings in the first quarter?
Okay, well, first of all, it seems extremely likely that the Fed will hike by 25 basis points at the February 1st meeting. That would take the Fed funds rate to 4.5 to 4 3/4. I think there will be another 25 basis point increase at the March 22nd meeting, and that would take the Fed funds rate at the top end at 5%. And then at the May 3rd meeting, I think the Fed will be on hold, keeping rates at a range of 4 3/4 to 5%. And then in the second and third quarters, I think the Fed will probably remain on hold and not change policies. But in the fourth quarter, I think that's where it gets very interesting, where the Fed, I believe, will be cutting rates by 25 basis points at one meeting in the fourth quarter, and then another 25. So I would look for a 50 basis point cut in summation in rates in the fourth quarter of this year from the Fed.
Thanks, Alan. Tell us, what are the most important economic reports this week? What are traders keen on?
Okay, well, first of all, this Thursday we'll have December durable goods guessed at up 2.8%. And then also on Thursday, we'll have the fourth quarter GDP guessed at up 2.7%. And then Friday at 9 o'clock, the January Consumer Sentiment Index guessed at 64.6. Of course, there are other reports, but these are the reports that are most likely to have a market-moving impact.
Lastly, looking at the stock indexes, what fundamental has supported stock index futures so far here in the new year?
Okay, well, it clearly has been a less hawkish Federal Reserve. We even had Fed Governor Christopher Waller on Friday saying that he would support a slower pace of rate hikes at the central bank's next meeting. So now it does appear extremely likely only a 25 basis point increase. In fact, the probabilities of that are almost at 100% for a 25 basis point hike. So it's really the Fed officials that are backing off of their hawkishness. And that has been the case now for the most part in January. I think this will be something that continues, and it is something that will probably remain supportive to stock index futures going forward.
Mark, turning to the grain markets, a lot of traders watching the South American weather. What is the latest with the Argentine weather outlook?
Well, late last week and again over this past weekend, good rains finally began to fall over a vast majority of the drought-stricken areas of the country. 3/4 to 1.5 inches of rain. They were common over these areas here. Some areas over 2 inches of rain this past weekend. This being the best rainfall coverage and totals in months. The next rain event is forecast for the middle part of this week into the end of the week. And beyond that, we have another 2 systems really expected in these same areas here into the first couple days of February. So with the demise of the La Nina weather phenomenon, we're finally beginning to see some more favorable weather pattern developing. Its impact on both the corn and soybean crops are going to be much debated here over the next several weeks, as there's no doubt that some of the early planted crops, roughly 50% of both the corn and soybeans, did suffer some irreversible crop damage due to the severe drought.
Mark, with the big changes in weather in Argentina, what's your price outlook for soybeans?
Well, if the current weather forecasts hold, I believe it's very difficult for prices to get back up to some of the recent highs that we've seen here, that being about $15.50 in the nearby spot March contract, and then just over the $14 price level on the November 23 contract. Well, I think the USDA production estimates are still probably a bit too high for Argentina. I also think they're a bit too low for Brazil at this point. In the end, I think they're going to combine to be pretty close to what the USDA has forecasted, maybe a slight bias to slightly lower production moving forward. So in the past week, I've been pointing out that 50-day moving average below the market for the March contract, right around the 1476 level, is the next key support level. An area we came close to this morning, but did not penetrate just yet. I look for this area to be violated here sometime this week, and I wouldn't rule out a move down to its 100-day moving average near the 1450 level. From there, I think prices will probably begin to consolidate a little bit while continuing to keep an eye on crop conditions in Argentina, also early harvest results out of Brazil, while also watching the flow of soybean imports over to China when they come back from their New Year's holiday this week.
Mark, finally, what's the latest from the spec traders in the ag markets?
Well, in the soybean complex, the speculative traders, they have a pretty large long position, and from a contrarian viewpoint, I think helps support a bearish price outlook. Last week, the money managers bought just over 36,000 contracts of soybeans. This extended their long position to the biggest it's been now in 9 months. In the soybean meal, the money managers continue to add to a record long position, while they're also long a little bit in the soybean oil as well. Corn, they have a pretty healthy long position. Really the only area in the agricultural field where they are not long, and that is in the wheat. They have a modest short position in the Kansas City wheat contract, while in Chicago, their short position has now swelled to just over 65,000 contracts, and that is their biggest short position now since the spring of 2019. So from a contrarian viewpoint, I don't think there might be a whole lot of downside here over the correction we've seen the early part of this week.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.